Mr. Chairman,
Mr. Conaway.
I've got an amendment at the desk, number 16.
Mr. Conaway has an amendment at the desk. The clerk will designate the amendment.
Mr. Chairman, we have an amendment to the chairman's mark to reject the mark's assumed increase in estate taxes.
Gentleman is recognized for 6 minutes now and for 1 minute to reply.
Thank you, Mr. Chairman. Mr. Chairman, this is another amendment much in the vein of the sales tax we've already heard. I recognize that there is a deficit-neutral reserve account provided for in the chairman's mark that is good intentions is to deal with this. As I mentioned earlier in the day, my only experience so far with reserve accounts from last year's budget is that is code for a tax increase, and that, to our way of thinking on this side, is not the idea. The estate tax, as all of you know, is intended to catch the ultra-mega wealthy of this country, much like the alternative minimum tax came into being in the Democratic-controlled world in '69 to catch a few mega wealthy folks who were arranging their tax affairs so they didn't pay any income taxes. It is bad public policy. It's clearly just straight redistribution of wealth that is wrong-headed in our society and is certainly counterproductive in the extreme. I tell many of my constituents that the most dangerous week of their lives, to those folks who have assets and beneficiaries, will be the week between Christmas of 2010 and New Year's Day of 2011. What I recommend to them is that they go ahead and celebrate Christmas with their families, but then make themselves relatively scarce during that next week, because if they're still breathing at midnight on January 1, they will immediately have a 55% partner in the estate, and most of them get it. They often smile and giggle, but there's the threat there that they understand, and while that threat is 3 years out, it is in the world of tax planning for estates or estate planning, that is not much time at all in terms of being able to put the right take advantage of the estate planning techniques that are available under the existing code. So with the estate tax going away fully in 2010, which is the right public policy, it then whipsaws back onto the American public in its extreme form that was in place before the 2001-2003 tax laws were changed to give that effect. Let me give two things that happen. Small businesses in my district are burdened with the threat of this tax. I represent rural Texas, and there are a lot of folks out there who are in the vernacular land rich and cash poor. It doesn't take a particularly significant per acre cost to get a small farm well above the exemption of $1 million. It would be about $3,400 an acre for a 300-acre farm, which in West Texas is a very modest farm, to get in excess of the taxable estate, which would require liquidation of the estate, liquidation of the farm in order to pay the taxes, or significant borrowing in order to pay the estate tax that's due upon the death of the spouses before what net assets are then passed on to the children. Even the poster child in support of the estate tax, Warren Buffett, who I believe is on record for being in favor of this tax, doesn't like it. He doesn't like it because I guess he thinks that Bill Gates can spend the $39 billion that's reported in the paper that he's given to the Gates Foundation. That Gates can spend that money better than the federal government. Kind of a back of the napkin thing. That's about $21 billion in taxes that he stiffed the federal government out of. If you like that tax, and I'm not sure why the folks who are in favor of this tax aren't just livid, that someone who was clearly intended to be caught by the estate tax when it was originally put in place has escaped $39 billion worth of property by giving it to the Bill Gates Foundation. Now, I don't know if he's actually given it to them because he's still reported as one of the most wealthy men in the world, but that's the public persona, that's public information that he's been given, that he's taken advantage of that, which is a little bit different from his support for the estate tax, which you would think if he supported it, that he would expose his estate fully to the estate tax. I want to yield a minute or so to Mr. Smith from Nebraska.